Well, hi folks, I hope this finds you well. I'm absolutely exhausted. This is a first for me. People around, lots of distractions, probably going to be screaming babies, but let's see what we can see. Anyway, this is the euro dollar. What am I going to be showing you? VSA. What I've been learning about VSA over the last few weeks, and in fact into months, a lot of reading. Lots and lots of reading. I should actually put together a reading list for everyone so you can kind of decide whether you want to come down this path and get onto the same kind of speed. Sorry about the screaming kids, that's the price of having to work outside in a beautiful evening. Anyway, on the screen here, I think everyone's seen the kind of crazy action we've had with the euro dollar recently, but what I see nowadays when I look at this compared to previously when I was just looking at pattern trading and hoping for the best, hit and hope with bats and Gartleys and the like, is price has come down here and it's come to a bottom and it's doing a Wyckoff thing. Richard Wyckoff, Wyckoff, not sure, in the 1930s was looking at price action. The M's and A's come from my exhaustion, I'm afraid. And one of the things he came up with was defining areas of distribution and accumulation. So a market will be marked down by big money. When it gets to the bottom of this markdown, the big money buys in, having sold out higher up, but they buy in over a period of time. They don't want to show people they're buying in, they want to hide it as much as they can, so they gather the stock or whichever instrument it is over time, and once they have cleaned up the floating supply, they then mark it back up again. And this is, I think, what we're seeing here on screen here is the markdown. They come to the bottom, they clean up the floating supply. Here they have a test at the end. It takes out stops and also tests for any further supply. In this case, you might think this is coming down here. There's lots of selling, perhaps because it's very high activity, but in fact, just immediately after, it pings straight back up, and off it goes into quite a strong markup phase. I'll just move this back along. Where's these buttons? I'm also quite new to MetaTrader, so bear with me. Okay, so what's happened here in this case is we've had this test here, and the reason I was talking about this area today is, and this is the hourly, is because, if I just zoom in again, I'm being clunky with this, I know. We have this volume bar here, which is, that's our research and development manager there. This very high volume bar here, which is nut bar, and people would think, well, it's nut bar and high volume, must be people buying in. Great, fantastic, I'm going to get involved. But actually what's happening here is the smart money is selling. Now you can tell because it doesn't close on the high that they're selling in this bar. And because they're selling, which is counteracting the buying, it's the two combined together to give you very high activity. Now, what you would be looking for after seeing this are further signs of weakness. Now, an obvious sign of weakness here is a double top. So what I've been doing and what I've been trying to build as a trading strategy is to, with David Alcindor's Eagle idea, is to look at an 886 retracement of this area here, which is, I guess, would be an aggressive C entry for a bat that starts there, or I guess nothing down here, but you can see up here it comes to the 886. We have less volume when we return to this region, and that suggests that this is a successful test. So they come back up here to see if there's more buying that might take this higher, but there hasn't been. There's less activity and it's tipped over. Now, that's not always enough to enter a market and feel confident with that. So having seen this weakness in the background from this weak signal here, and then look at what could be distribution going on there, I would go down to a smaller time frame. So in this case, a 5 minute, and oops, a daisy. Look for some reason. So this is the second top we're looking at here, and look for some reason here to enter the market short. Now, what you can do, of course, is place a limit order on the 886, which would have got you into this, and you'd now be in profit with a short trade. What I would do is place two positions, because of the way my broker works. It could be one position that you split in half, but I can't do that, so I have to place two positions. The first one would be a 1-to-1 risk-reward ratio. I really hope this is recording because I've been yapping on for some time. The first one would be a 1-to-1 risk-reward ratio based on, if I go back to the 1 hour, my eyes are starting to cross over now as well. Based on a stop up at the 113 here, maybe the 127. That's our operations manager now. Anything going there? Blah blah blah. So I would place a stop above the 113 here, or even above the 127, based on some stuff I've been reading by I think it was Scott Carney. He calls it a failed wave. It's essentially the top of a shark where you have a 113 extension, but things tip over there and fail because they can't bust up into a proper full new high, a new close high above the first top of a double top. So it's quite a safe area, especially if you're seeing all this weakness in the background because of this. That's quite a safe area to put your stop. I've been finding, and that's really the basis of where this strategy comes from. Weakness in the background, and then a failure to rise any further. A top, essentially, double top. So, and works the other way around, of course, as well. It didn't do it down here, but it's certainly doing it up here. So back to the 5 minute, and besides the just straightforward limit entry, if you wanted to, what's this doing now? If you wanted to stop my screen doing this crazy thing, daily, back to 5 minute. Help, MT4 people, what am I doing wrong? Okay, it was all going so, there we go, it was all going so well. So here you have the second top, and if you wanted a more conservative entry than just placing a limit order, what you really want to look for is the market's going down, and attempt to buy again, but when that attempt is made, when prices go back up, there's an obvious sign of weakness there in the attempt to go back up. And now what that would be is price going up, but the smart money not being interested in that rise, so volume is very low. And you can see here on this hidden gap volume, which just colors bars depending on what size they are compared to previous bars, that these two up bars here are both potential no demands, where they're very, got a couple of guys yapping behind me now, sorry about that. So these two bars here are both potential no demands. They're up bars, they're quite narrow spread, and very low volume. So there's no interest in this really going higher. And you see on the second one here, it's a confirmed no demand, price closes down, and from that point on, we just don't get here again. See that? So this would be your conservative entry, and again, you place your stop up there, closer than the 113, just above here. You could really place it above the high after the no demand, in fact, because it's this is the market saying there's just no one's buying up here. That's essentially what's happening. You've got imbalance in supply and demand, and things tip over. Your first target would be from your entry point, which is down here on the close of this bar, to up here. That's your risk. So your first target would be this distance here plus whatever your spread is. So I guess down here, and you'd already hit that, so you'd be in a free trade essentially. And your second target, well, discretionary, really, it's up to yourself. You can have it down here, or whatever fits in with your trading. I mean, this looks like it could now go on to be a bat. So perhaps have it down here, the 886. Something else worth mentioning is how often these come to 50 to 618 retracements in a healthy market. There's someone almost dropping their baby. Wow, it's all happening down here. Anyway, that's pretty much it for the trade that I have no name for, that I've put together. You'd see here also, just worth mentioning, when you hit your first target, you again have a very high rise in volume there, a lot of activity. The bar closes up, that would be a warning sign that maybe your first target is all you're going to get. Alright folks, I'll post this up if it doesn't sound too bad when I listen to it again. Cheers.